What's up, guys? Welcome back to the Bitcoin Advisors Monday morning. President Joe Biden, President's Day. And we are going to review a little bit of Bitcoin here, and we are going to try to take a short position. So I'm going to share my screen really quick here. Share screen. Let's see. Boom. And I'm going to hit share. And what screen am I sharing? Do you guys see this Kucoin chart here? Yes. Yeah. Thumbs up, thumbs down. Yep. Okay. And I wonder if I move it up here, because I want to get all of our mugs on the screen here. So let me try it again. Hold on. Basically, this is your Kucoin setup. And the reason I'm showing you guys this right now is because the market is peeling back a bit here. NASDAQ's down 200. So NASDAQ's peeling back. Bitcoin is peeling back just right now, getting rejected off the yellow 21 on the 4-hour and the 1-hour. And do we have any divergences here? Let's see. So anyways, I do think I want to take a little bit of a short position here. Why? Even though this looks like a corrective signal, volatility is maxed out. We've got momentum to the upside and no real divergences, but let's see. Yeah, we got 1, 2, 3 higher lows. And so we hit the green 55. And if you have your divergence chart on your desk there, what we want to look for is bullish or bearish divergence, or hidden bullish or bearish divergence. And again, I know this is probably sounding like rocket science and I'm going a little bit fast right now, but I do think there is the potential for a good trade and at least move back down to 37,555, if not a little bit more. So I want to show you how to short, and I'm just going to do a 2x levered trade. So here's where you select your leverage. I'm going to do 2x. I'm going to say, since I'm shorting, I'm going to click the buy side. It will automatically fill the price right there. And then the amount of Bitcoin I want to short with. And just to do a little bit of a quick trade here. So I'm going to sell it short 2x 5 Bitcoin. So that's a $192,000 short position. And then I'm going to click. Yeah. And then I'm going to click sell short. And then it makes me put in my little password. And I'm about to explain why I'm doing this right now, but I do think there's a good potential for the market to pull back a little bit more here. And it's showing my order filled. Here's where my orders are open. It's filling it slowly but surely. So I shorted with 5 Bitcoin and it says unfulfilled, right? So only about a half a Bitcoin filled. If the whole order doesn't filled, I'll hit cancel and then I'll get, I'll just replace it at a little bit of a higher price. But let's see here. 38,582. So I sold it short here. And it's not filling because the price is going down. It already kind of skipped over my order, I believe. And I don't like when that happens because what is going on here?
So this kind of a short is just now you're basically betting it to go down.
Yes. I am betting it to go down.
I didn't see you put any stop losses.
I did not, because my order has not fulfilled yet. And I'm just trying to figure out why my order price is at 38,582. So I sold it short at 38,582. Now it's 38,547. So it instantly went shorter, right? Or it basically didn't fill my order, which it might pop back up here. Here it comes. Here it comes. Do you see where the red line is? That's where my order is sitting on the books. Do you see that right there?
Yep.
And are we going to bounce back up a little bit?
You're on mute.
So is this going to be a good time to put a short in? I'm looking at the 15-minute, which is decent for a kind of looking at entry times, but why I think this is probably going to play out here. Oh, it looks, should be filling here. So close. Do you see that little tiny red line? I don't know if you guys can see that, but there's two lines there, right? There's where my order is sitting on the books, and there's where the price actually is right there. Do you see that?
Yeah.
And it's just
Yes.
going shorter and shorter. So what could happen, it could bounce off of this support level right here and come right back up. But I don't want to take that chance. So I think I'm just going to replace the order. Look at that. I already would have missed $60 a trade. I've already missed that much. And if we just get a tick below this guy, I'm willing to bet we come down here. I'm just trying to get this order in, and then I'll kind of explain why I think going short is a decent idea right now.
So how much your order got fulfilled so far?
So it says unfulfilled. It was 5 Bitcoin. So only
0.7.
0.7 roughly got filled. But this is, your support level. Once you get a tick below this guy right here, it's probably going to come right back down in this region. And with the stock market peeling back right now, 250 points down, the dollar is still relatively high, and it's up there towards 96 cents, which it's been for a while. Spot price is down 1,200, getting rejected off the 9 right there on the 4-hour. And I do think so. So the 15-minute candle just closed. Sometimes you'll get a backfill and it will go right back up to the top line, like where you were. And it might even bounce way back up. I mean, this is the support level. Typically, you don't want to buy on support, right? This would be support. This would be resistance. If Bitcoin was in a 15-minute range, Hogan, are you looking? If Bitcoin was in a 15-minute range, this is support. This is resistance. Typically, you want to sell on the top side of the channel and buy on the bottom, but 15-minute is just such a weak time frame that it typically doesn't do much. And what else am I going to do here? The hourly is going to close in 3 minutes. Let's see if the 2 hour is going to close in 3 minutes. And anyways, I think I'll just let this order kind of sit there. And what I would do is I'll put my stop market right here. at like 39,328. And that's basically at the wick high of this, above the last wick. So if the price goes up from here, back here, it means probably my idea for this trade has failed. And now the market's going to go against me to the other side. And it looks like I might start to get filled here. Look, here it comes. So close. So it's kind of annoying, but anyway.
Is there a different way to, because isn't there like your price and then there's like a hedge price that's like a few thousand, within a few thousand range to catch if price slippage is too fast? So to make sure you catch the.
I'm not, whatever you're saying is not computing with me.
It's not making sense. All right. I'm not entirely clear. I just thought you had to put two prices in when you did a.
No, I did a limit order. There's a difference between a limit order and a market order.
Oh, gotcha. Okay.
So look, it came all the way up to where my order was right there. Look how close it came. It's like the computer or the robots, they want to bait you into like getting back out of that trade. It's very strange how that happens. But so why am I going back and forth from TradingView to Kucoin or to this chart is a 15, sorry, that's a 5-minute. This is the 15-minute. TradingView is just easier to see and work off of. So the 15-minute, yeah, I think this is going to come down. And see, I'm missing it right now. Look at it. So I'm just going to, I think I'm going to, when's the 15-minute closes? In 55 seconds. So if we don't get a little backfill, I don't know if you guys can see this really well, but here's the 15-minute candle. It is closing in 41 seconds. You see that right there? 39 seconds. It's closing. So what happens? This is the support line I had drawn in for a breakdown level. If we get a little backfill here, and you know, what kind of candle is this? Do you guys remember what kind of candle this is? This is like that's a downwards continuation candle. This would be like a spinning top when it closes here in 3 seconds. You got a little wick to the top, a little wick to the bottom, and continuation to the downside. All we want to see is a tick below that. But what I want to see is a backfill up back to, it's at least going to touch that green 55 there. So am I going to get filled? Come on. This is what trading is. How exciting is this? Like watching paint dry or what? But hey, I got $200,000 on the line here. I'm going 2x short. So there it goes. It's filling right now. Did I get filled? No. Should fill right now. Come on. There it goes.
Filled it. Right? Yeah.
So no longer have open orders. And where would I put my stop market? So typically just a tick above the last candle gets you moved in the 9 exponential. We got that. And typically this is a buy signal when you get the yellow 21 crossing the green 55, which we have that right there. But that's not a good signal. That's See how the prices are just too close together? So how would I kind of be judging this as a bull trap or a bear trap on the 15-minute? Well, what you can do is use our Fibonacci retracement tool. And this is the breakdown level. So you can go, remember, from candle body or wick, right? So I click there and I'll go here from the body to the bottom. So on a weak bounce, they fail at the 382. On a bull trap, it fails at the 0.5 of the 618, which is right in this area, right? And so now price is coming back down. That's nice. And that's called a backfill. See how it just, and again, remember, we're on the 15-minute time frame. This is like a very low time frame. I only use this for entries, really. Sometimes I'll go down to a 5-minute. But remember, it starts with the higher term time frames is what's going to give us a bigger move to the upside or to the downside, right? So why did I kind of get in on this? Well, one, the stock market is pulling back, right? And we know Bitcoin is really attached to the stock market. And on a quiet day like this, when the market closes, when does the stock market close today? Oh, it closes on a regular, it closes on stock market holidays. On President's Day. Let's see. Oh, the stock market's closed for today. So I might be looking at, yeah, I'm looking at last week's price on Friday where the market closed. But look at this coming down here. And right now I can look at my position and I'm in a $900 profit already on this trade, right? So again, why did I take this trade? Let's see here. Well, look at coming down, coming down. Where do I want to take profit? Based on the 4 hour, we got two. This is the 4 hour time frame. I might want to just take that profit really quick and go, here's $2,000 for my back pocket. But I think I'll be a little greedy and leave it in there a little bit longer. Because there are some contra signals playing out here, but what we're looking at is trend momentum and volatility. And I'll tell you what happened over the weekend. So again, we've talked about these things in the past, these gaps, right? These gaps in price action. So that was where on Friday, and you can see it a lot more on the hourly time frame, which I think the gap did get filled. But on Sunday afternoon at 3 o'clock, the futures market opened, right? What is going on here? Sorry, guys. I don't know. My computer's going ape crap. It just. So let me get this chart naked over here so we can see this gap here. Okay. So what happened over the weekend? So on Friday, the market closed at 39,900 on the CMEs. It opened at 38,860. Okay. So when it opened, there was this huge gap in price, and we got continuation down right away. Why was that? Well, spot price on Sunday spot price was at like 37.5 in this region. Anyways, when in this particular gap, when the market gapped down, I thought the price action would get filled. So the gap would get filled and the price was down here. And I was like, look, this gap is probably going to get filled. So what happens? Why do gaps like to get filled? The market wants to verify if the gap, like the price action, is true or not. This gap never got filled until all the way back here. Do you see that? So we had this, and this was the gap we were talking about last week, saying, oh, if this gets filled. So when the price comes back to the gap and it breaks through the gap, that is the market confirming that price action should go in that direction below the gap. This gap got filled right here. You see how the price came up exactly to this line? Do you see that?
Yep.
Yes.
So that is a gap fill. And what did price action do? It just came up, confirmed that we wanted, that the price wants to go down, right? It's just, the market is just verifying. If that makes, it's really hard to put these words all into context in a like way that makes sense. But basically the futures market is the future price of Bitcoin. The spot price is the price that is, 24 hours a day. And if there's a gap in the future price, a lot of times what happens is, again, the gaps like to get filled or confirmed. Anyways, if typically what you'll see is when you have these gaps over the weekend from Sunday to Monday, is the gap will either get filled right away, like within a couple of hours, or it'll just gap up like this one, and you'll just get continuation to that direction, whichever the gap direction happened, right? So when the price was right here, I actually let go of my position actually right around here, around 38.5. And I just took my profit because I thought the gap was going to get filled. And what I was going to do is I was going to go long right here up to the gap and then short it again, but I didn't have time. You can't get every trade, et cetera, et cetera. But the reason that I had a feeling the price was going to gap up was this. There was a bullish divergence between this point and this point. So again, what is bullish divergence? When price is making lower lows and RSI is making higher lows. So price is making lower lows here, right? RSI is making higher lows right there. Does everybody see that? Price is making lower lows. And here's one too, right? There's like, I wouldn't even say that's a confirmed lower low. So I'd say this is two drives. And remember at the bottom of your sheet, you want to see the 3 drive philosophy. 3 drives definitely will play out. And here is your 3rd drive right here. So what happened right here, as soon as we got a tick above this last high, well, look at this gap. What happened there? 38.03. Anyways, back to the CMEs here. So 3 drives will get you a move to the yellow 21 and sometimes all the way to the green 55 when you get 3 drives of divergence. And that's pretty much a perfect play right here, except for volatility was not low. If volatility was low and you had the cross up and you had the 3 drives of divergence, that would have been a perfect buying opportunity right here. As soon as this guy ticked above there, he would have took a long position and then you would have got out here. And the trend is your friend till the end of your trend. And you can see the yellow 21 and the 9 exponential are just governing, right? They're holding the prices down. So anyways, why did I just take that trade? Mostly I was by mistake. I thought this was live price action. It is live price action. What am I talking about? The futures market is open, but the spot market is not open. The futures market is open, but I believe the New York, the regular spot market is closed. Okay, so I am correct. Not that bad. Anyways, when stocks are really weakening right here, and this guy is breaking the range to the downside on the 4-hour time frame as volatility is expanding. So I really took that move just by glancing at this price action. I just glanced at it. I was like, okay, we're down 260, down 54 on the S&P, down 300 there. The dollar is still strong. Bitcoin dominance is up. And what's happening here? This thing's about to get slacked, I believe, with just a tick below or a closure below this guy. Right. So I'll just move this. I'll just draw another line here. So this is NASDAQ. And some people would say, and this is going to close in 55 minutes. This is a 4-hour time frame on NASDAQ. So if we were operating based off of closures, right? See this, Hogan? Closures. If we were operating based off of closures, then the 4-hour would have already closed below. You see, this is a closing low below there. Does everybody get this, what I'm talking about? Yep. Hogan, what am I talking about here?
Yeah, you're talking about the candle that you're highlighting is closing below a certain area. And you think that the price is going to get slacked because of that closure. That's what I'm kind of hearing.
So do you see how this is kind of the range? You got this high.
The 2 white lines.
Yeah.
You're saying is the range. Yeah.
That was the range.
Sure.
So how would you draw the next move and get a target for the next move? Is you would take the width of the range and you would just go like that. Right?
Okay.
And then you could use your fib
to see the percentage.
And you could go from here to, actually, you'd probably use the top of the range here, right there.
Okay.
And that's probably a more legit target is this 13,500. But either way, if the NASDAQ comes down that much, and that's just your first drive, and some people might even take the range and call it from this guy to this guy, right?
What from what? Oh, okay.
From here to here. And then you would measure it from here to there, and you probably get a much bigger move.
Oh, nasty. Now, what's the difference in strategy? Is one of them just a more aggressive approach?
Yeah, I think one's more aggressive, one's more conservative.
Okay.
Now, is this NASDAQ futures? Since you said it's not open, right?
Yeah. So you see the symbol here is NDQ1 exclamation. And again, all you guys should start adding these symbols. The reason NASDAQ and S&P and Dow futures is better than regular is because the market closes at 3 p.m. or 1 p.m. or whatever it closes every day, Pacific time. But futures trade 24 hours a day, pretty much except for Friday to Sunday. So anyways, that was my first tip off to take that trade. The second tip off is that we're just getting governed down by this yellow 21. And look at this trade in profit, $4,000 right now. 15 minutes. Not bad.
That's
huh?
an easy way to make 4K.
While I'm on stream. So now the question is, do I want to take profit, right? Because that's the hardest part. Now I got this little profit. You know, the 4-hour closure is about to close here in 1 hour and 42 minutes.
If you're up 4K, bro, I would take it.
Should we take that and buy Hogan some sneakers?
$4,000 sneakers? Oh, baby.
Bitcoin Advisors cruise.
Yeah, we all go to Mexico. But you can still see this cross is in play. The volume is
Yeah,
not.
what was up with that cross, Chris? That's a silver cross. Isn't
That's
it?
the silver cross, and you got the death cross, right?
Ooh.
We went over
Nasty.
those on Friday. You know, hopefully you guys still have your notes from that. So what's the next thing I want to do? What I should have done is I should have done 10x leverage, right? I made 40 grand.
Wow.
But it looks like this range is getting destroyed. And how would I know? It's probably a decent time to take some profit. Well, when volatility is maxed out, that's typically a time you want to take profit. Did we get a move all the way to the bottom side of the range? Not quite, but here's what I was hypothesizing is that Bitcoin was going to get a drive back up to this $40,000 range. And if it showed any kind of a weakness right here, that was going to be your classic bull trap. And again, why is that a bull trap? I'm willing to bet it got stopped out at the 618. No, it got all the way above the 618. So, but as soon as you close back below the 382, so I'm taking it from this wick right here to this wick right there. And I mean, that's almost like a reversal, but what I was waiting for, if the price was going to close back above here at 40,000 bucks, that was going to get me long. That's what I was waiting for to take my long signal. When I made the decision, I was like, oh, I'm not going to long right here. I don't have time. I've got my kid, blah, blah, blah. I'm going to wait for a closure back above 40,000, or even more conservatively, like somewhere above here, 41.5, or above this guy at the 200 exponential. But yeah, so again, what else would I use to say, okay, maybe I should take some profit this hourly? Let's take a look at our lower term time frame. So why do I think this probably has a little bit more to go? Well, it could get to the bottom side of the range here at 37.5 or 37.4. And so I've got everything on my side here. I've got trend, right? We've got lower lows and lower highs. So what is my next conclusion off of this 15-minute time frame is that we're going to make another lower low. So another lower low could come anywhere around here. Momentum's coming down. Volatility can tick up. And on the 15-minute, you can get to 100% read pretty easily. And this guy's getting kicked back into the bearish control zone. And really, if I wanted to short-term trade this on the next 15-minute closure, what you'd be waiting for is just a take profit right here at 37,902. So if I wanted to take profit there, here's how I'd do that. I'd come right here.
So before you do it real quick, Chris, so you're saying that you just are going to have this layer where you're in profit right now, you're already in profit. And then if it goes, the trade starts to go against you, you're protected and you're,
Yeah.
okay.
So here's how I'd protect it. You can go right here. You put your stop loss in. You can do it the mark price, the last price, or the index price. I don't know the exact definition between all those, but what I use is the mark price, which is this price right here. See mark, index. Those are those two prices right there. So I would type in based off of this guy right here to protect my profits above 37,929. So I would type in 37,929 and I'll go mark price. And then it'll tell me right there, based off of that price, my profit will be 3,265. So I give up $1,000, but at least if it goes against me here,
yeah,
I got it protected.
You're making money no matter what, basically.
No matter what.
Then if it keeps if it keeps riding down, then you can
Keep making money.
change your
money. Yep.
You can
And
keep
so
riding.
why did I do that? Well, because I know on this next 15-minute closure, okay, if we tick above this high, it's going to go to the 9 exponential. At a minimum, it'll go back to the 9. Plus, this is the bottom side of the range. So what's typically likely to happen? The more times you you typically want to buy here, sell here, buy here, sell here, buy here, sell here until the trend is over, right? So this is a pretty nice. And then what I could do is once we get back up to the 9 exponential, I could sell again. And just assume that the 9 is going to govern this trade to the downside. But you could see this candle is a bearish continuation candle. So we're getting continuation to the downside and we had volume. The next thing I'm going to look for are divergences. And again, what are the divergences? Bullish divergence, price is making lower lows. RSI is making higher lows. And bearish divergence, price is making a higher high, but the RSI is making a lower high. So do we have any higher highs here? No. Okay. Do we have any lower lows here? Well, we do have a lower low between this point and this point. We have a lower low between this point and this point. All the way back to here, we got lower lows, right? Or sorry, the price is making lower lows, but RSI is making a slightly higher low.
So question for you, Chris.
Yeah.
Like on that. So there's the low where you just had your mouse, which is the one that's like the
here.
No, the last, yeah, right there. And then there's the one right before it. It seems to be a,
yeah. So that's a higher low.
Okay.
But compared to this point, it is a lower low.
Okay. And which one takes precedence? How do we know like what takes precedence? Does that make sense? Because we got both.
So we're kind of looking for divergences here. And just because you have, and this is kind of a nuance to this whole thing, right? And something your eye is going to develop over time. It took me a while to figure this out too. And sometimes this is kind of like a fake out move where you get this $1,000 up and down. Look at this guy, right? What is this?
Yeah.
Down, right?
Yeah.
Just faked everybody out, right? But I do like this kind of setup for a downwards continuation. And, you know, I might even want to throw on, like if I could get a 15-minute closure below here, right? I'll throw on another, I'll throw on another 100, 200 grand short. Why? Because the next drive down, the next move down here is to 35.8. Okay. So that's where I'd really like to see. Now we're kind of in the middle, kind of in no man's land, but we have these things working for, we have momentum down, volatility is expanding, right? Stock market is down, Dow's down, all these things are playing in. Plus the higher term time frames are really starting to come down. The daily. So, oh, and I'm glad I checked on this, is because I mean, we're looking at the micro time frames, man, like little baby term time frames where that's not going to get you the big momentous move that we're looking for, you know, one of these guys right there, right? And really what I had been, and so technically if you know, this would be a higher low on the daily time frame, which should get us a decent size bounce back to the upside. But if we get a daily closure below this guy right here, you know, some people use wicks, some people use closures. You know, wicks is more conservative. Wicks is more aggressive. Closures are more conservative.
Could you say like speculative might also be an appropriate term there? Like for the wicks, it's more speculative to use a wick.
I'd say no. The correct term, conservative versus
aggressive.
And I actually want to rephrase that. For me, it depends on whether it's to the upside or to the downside, I guess, but closures are technically more, sorry, how do I say this? So if you get a candle body, full body closure below the last closing body low, right? So let's say your full body candle came down here and closed below, but it didn't close below the wick, right? That doesn't necessarily do it for me. What I want to see is a full body candle closure below this last wick low. And for me, that's going to give us a nice move down, probably a bit lower. You know,
so just to be clear, you want the candle body to be below the wick.
Yeah.
Right there. Okay.
And that will be like full confirmation. This baby's coming down to doggy town.
You're kind of almost using both. You're using a wick and then you're saying, I want my body to go below
the wick.
Okay.
Yeah.
Wow.
Yeah.
All right.
That's a more conservative way to do it. Some people will say, okay, if I just get a closing candle body below this candle.
Yeah.
Right. Closing this body closure.
Yeah.
Some people will say, okay, that's enough for me to do it. Right.
Got it.
So what am I seeing on the daily time frame? And you always want to line this up with your shorter term time frames, but this is really looking good for more downside continuation, which I wouldn't mind adding to my position to the downside for this very reason. And we've got momentum down. We've clearly got a downtrend. So the way I would be, so again, here's the difference here, right? So you see this candle body closing high right here. See this? That's candle bodies, right?
Yeah.
We didn't get a candle body closing above this wick high. We got a bunch of wicks above, but the body didn't quite close above it. This was a total fake out. So this, to me, looks like we got, some would call this a higher high because you got a candle body higher than this body, right? And yeah, I would consider this a higher high. And there's your higher low. And you're expecting to get another higher high. But what happened is you got a total bull trap. And where do the bull traps come in? At the 0.5 and the 618. So Sorry, I got to draw this the other way. Let's see. Here we go. Wick to wick. Yeah, I mean, this is a total fake out. This would have looked, you would have wanted it to stop right here, but it actually closed above. So I'm sure a lot of people got screwed on this one. A lot of people got screwed. So there's a lot of people sitting there in a loss right now who don't know what they're doing. They think, because a lot of normal people just trade, they can identify a range, right? And they see the ranges getting broken and they'll buy the breakout like this. This is the breakout. So you had a candle body closure above here. And a lot of people say, okay, I'm going to buy now, right? They see this huge green candle. That's a green continuation signal. That looks like it's going to go higher. But I'm sure a lot of people got screwed on that one. So that's the next thing I want to bring up is open interest. And I'm going to bring back up open interest. And what does this represent? So this chart here, the black line is the price of Bitcoin. The purple line is the open interest. Does anybody know what the open interest is?
Yes.
What's
we
open
all
interest
we
represent?
all know, we all should know because all of us have the script, right, guys?
What is open interest?
Open interest is, do you want me to read it or do you want one of the other guys to read it?
You can read it.
Our open interest is a measure of the interest in the leverage, futures, shorting, and margin trading crypto markets.
So it's all the leverage positions on the board. All the leverage in the market. What is leverage? Leverage is exactly what I have. That I did a 2x leverage trade, right? So I'm getting double the performance of the market, and I'm not even trading Bitcoin. I'm just trading a derivative of it. It's pretty cool. Starting with, we have no snacks.
Get a protein shake if you want. So question for you, Chris. I remember about a week or two ago, we were discussing the prospects of maybe going back up to the $52,000 range. And I know that you said that it was subject to change, right? These things are always subject to change. Has that been invalidated for now? Are we still waiting for that to happen?
What did you say that again? Sorry, repeat.
I just said that a couple of weeks ago, we were discussing how there was a range waiting to be broken out. And we were of the opinion that there was potential for the price to move back up to the 52 range if some things happen. Has that been invalidated or are we still waiting for that to happen? I know you said at the time it was subject to change, like anything can switch up, but are we still waiting for 52 in any way, shape, or form?
Oh, yeah. So, okay. So let's get back into some higher term time frame analyses.
Got it. And that's where we'll start to see that play out.
Look, I'm just checking back in on my little trade. It's sitting there nifty at 4,500.
Nice.
Okay. So what we had been talking about last week, what we did say on Friday, right? As we were waiting for this was the range we were waiting for resolution. Okay. And we said, that's why this is really helpful for me. Not only is it helpful for you guys, hopefully, but it's helpful for me to remember what I was talking about. I wonder if that'll get us on the screen record our little faces. That would be so cool for our YouTube channel. But what we were talking about here is, okay, if you remember last week we were talking about this in our meeting, I drew it out on the board. I said, look, here's the range, 46,000 to the upside and 40,000 to the downside. Remember I said that? Everybody remember 40? I was saying 40 to 46. I had it drawn out like that and we were using wicks and we said, hey, that's why we want to see a full body candle closure above the wick. And again, that's the more conservative way to be judging this is the body closes above the wick. Some people want to use candle bodies, right? You would have got faked out there. Oh, you would have got a fake. Look at those fake outs. That's 3 fake outs in a row, right? Because Before, you would have looked at the range between this point and this point, right? And right here, you would have got that full body candle above there. And you would have bought right here. Does everybody see that? Does that make sense, Rob?
Not entirely. I kind of got lost on that last.
Okay. So what I've been talking about for about 10 minutes here is the difference between bodies and wick closures. Okay.
Mm-hmm.
So let me just clean up this chart and take off some of the drawing tools here. Okay. So we are on Kucoin, one of our favorite leveraged exchanges. I'm sure we're gonna get a paid partnership here any day now. Okay. So what I was just talking about is the difference between waiting for a closure. So let's say all this price action was not here, right? You can't see any of this from this point to here is gone, right? You follow me, Rob?
Yep.
So we would have had this marked off here, and we would have had this marked off here. And we would have assumed that this is the range.
Right.
This is the high side. This is the low side, right?
Yep.
So if you were using candle bodies for judging the break of the range, as soon as you had a body closure above this high, right? You would have said, okay, time to get bullish, time to buy. Because the range was broken to the upside. And where was volatility though? Here's the other kind of tip that this wasn't going to be a good buy right here. And why it's so important to understand and go back through all these videos. What kind of candle is this? Is a Doji candle. This is a candle that represents indecision. So the market cannot decide whether it is a good buy or a sell. It had kind of low volume, but what was kind of the indicator? Volatility was already at 86%. The stochastics were in the critical zone, way up. So they're already pretty high. And RSI was just getting up into the bullish control zone. And I mentioned to you this in the past, usually the first time the RSI gets to the bullish control zone, this is typically a sell. Like it usually gets rejected the first time. Okay. It's usually the second time. So it comes up here, gets rejected, comes back down. The second time it gets in there, that's typically the buy time. But you can see it got rejected again. It didn't even get into the bullish control zone. So
real quick question for you. So that, okay. The purple one is the bearish control zone, and the top blue one is the bullish control zone.
yeah.
Okay. And when it's in the bearish control zone, we can
Assume the bears are in control.
Okay. Oh, that's a really cool one.
What's that one called again, Chris?
Awesome.
That
So
chart.
this blue zone right here, that's called the bullish control zone. This purple one is called the bearish control zone.
And that's the RSI overall, right? The indicator.
Yeah.
Okay.
That indicator is the RSI, but actually the RSI itself is this blue line right here. But
got it.
This indicator, these are just like paint, like
And
this is what we call the RSI indicator. Yes.
And the white line is just tracking the spot.
No, the white line is actually the EMA. And the way you can find this guy Okay, you saw, by the way, guys, if you ever want to see your indicators like disappear or reappear and be able to adjust the settings, you come up to this guy in the top left corner here. You click that arrow, right? And it will either make all these indicators appear or disappear.
Awesome.
So now you can see the title of this indicator is called RSI _ EMA zoned, right? So these are the zones. Yeah. And the EMA is an exponential moving average. And if we go to our settings tab, we can see the EMA length. So that's a 12 exponential. So that is a 12-day exponential moving average. That's what that line represents. Okay. But back on to what we were talking about, closures versus wicks, right? So here was the range we were looking at. Before all of this price action, we were looking at this range to the downside, to the upside. And I don't know if you guys remember, but we were talking about the gap being filled back here down at 30,000 bucks on CMEs. Just to reference this back here. You see that gap right there? Look how it got filled to the T. By the wick. So the price came and tested this area after how many months? This was back from July. This is January. So 6 months later. So sometimes you get a gap up. When you get a gap up, and we identified why this was a bear trap, right? And again, here's the difference. If you were going based off of closures, or, you know, remember all this price action, like from this point on is not there, right? You would have just been looking from this point to the left, right? And your range would have been, if you were operating based off of candle bodies, it would have been here and there, right? Here and there. And as soon as you got a closure below this body, that would have said, okay, you know, time to get the measure move down on this thing, which would have been from this body to this body. And this is what, honestly, I think I got faked out on this one. It would have been like that. That would have put you down at 22,000. As soon, a lot of people got faked out on that. That's why it's so much better to go off of wicks. You want to wait for a candle body close. See how the body of this candle never closed below this wick? Is this starting to make sense, Rob?
Yeah.
Joseph, are you getting this? Does this sound like rocket science?
A little bit, but I'm catching on.
Okay. Wade, how you doing, buddy?
Yeah, same, just a little bit here and there.
So Chris, are you saying that it's more conservative to go with the wicks or the bodies? So
you want to see a candle body closure above or below the range wick, high or low?
Oh, gotcha.
Yeah. So again, if I clean up this chart, and other traders don't do it like this. A lot of people operate off of candle bodies, and I'm sure they have a lot of success. I'm just going to erase all this and look at CMEs right here. This gap already got filled. This gap got filled. But let's say we want to now create a new kind of range wick, high or low. What are we waiting for? We'd be waiting for a closure above there or below here to get your next big move. And that move is going to be massive. I think the next closure outside of this range is going to either, well, let's measure it out. Where would the move get you? that would put you up to this guy right here at 58,000 to the upside. And that would get you down to 20,000 to the downside. Now, here's why this may not, like that might not be the correct interpretation necessarily. We're only going to find out once it happens, right? But I do know this based off of another indicator. I don't know what happened. What happened? Okay. This is another indicator. Rob, you can add this one to yours. The guys don't have the
VPVR.
Yeah, it's called the VPVR. It's called the volume profile. Which if we go like this, I'm just gonna have to stretch the screen out a little bit. Wow. So what this indicator does, it shows you the volume of buying or selling in that particular region. This line, this red line is called the point of control. And so it's looking at the price action from October 7th to February 22nd. And what it's telling us here is here's where the major points of support and resistance should be. When the volume, see how it's way out here, right here? And way out right there. That's telling us these areas are going to be areas of support. So you can see it's bouncing right there. If price action does get below this guy right here at 32,000 or 33,000 right here, this line. Yes, I do believe we'll get a shot. Look at that, how it measures out perfectly. Okay. So see how the volume is lower in this region. The volume of buying and selling is lower here, but it's higher here. Do you see that? Hogan, you look confused.
Yeah, it was actually more like a, like interesting face, but I am still a little bit confused. Kind of like, is this a measure of the full historical? Okay. So looking back throughout the history.
Measuring. So this bar right here.
Yeah.
Is taking all the price action in here.
Yeah.
And it's measuring how many buys and how many sells happen during this time frame.
Got it. So it massively reduces in this like 20,000.
Yeah. Once you get
range.
below here, right here at 32.5, volume drops off like a mother. So what that tells us is there's not a lot of people interested in buying or selling at this price level.
Got it.
There's not barely anybody who cares about it right here. But then when's the next area come where people start get interested in price action again?
Right below 20 grand.
Right here at 20 grand. Right?
Yeah.
So I would say, you know, if we did get a daily closure back below this guy, you know, for sure we get a quick move down to 30 grand, 29,000. If that area breaks, I mean, really,
19.
I think if we break below 33 over time, this gap is going to get filled. This is the gap coming back to December 2020. So again, back to Rob's question, we were trying to focus on, I don't know why I brought that indicator in there, but we'll go over that one another day.
That's a cool enough. Thank you.
That is a cool one. I don't,
like
I'm
and it works on all the different time frames. I mean, you could throw it on instead of looking at it on a daily, right? Let's say we want to look at it back on our 15-minute. I don't know why this thing's doing it to me. Back on our 15-minute.
Wow.
And I'll look at it on spot. Oh, look at that. Did I get wicked out of my trade? I think I did. Yep. See that big wick?
Whoa.
Look at that thing.
So So you took your profits. Your profits. Got it.
Because why? Look, the price retraced all the way up there.
Yeah.
And now it might be time to go long, but
Question.
yeah.
Okay, so the wick only needs to go up and you're out of your trade. The body, there's no, okay, yeah, okay, that makes sense. Yeah. All right.
Yeah.
Wow.
But look at it getting rejected here really quick. So sometimes those big wicks come just to get people like the robots. They see these orders sitting on the book and they just want to get people out of the trade. And, you know, the machines get paid. Look at this thing going the full retrace, getting rejected. This is some volatile price action, dude. This is what you want to see. If you want to make money, you know, going to the downside and to the upside. So how would we confirm this divergence?
It's crazy to see it change real time like that. Like it is right now. It's pretty awesome.
But what would give me the idea that, hey, we're going to get a move all the way back to the top side of the range here? Well, what I'd want to see is in a 15-minute time frame is not really going to do it for me. You want to see more like an hourly play out. The hourly is going to close here in about 6 minutes. Hourly momentum still to the upside. Volatility is maxed. Do we have any divergences? So again, we were talking about this briefly. What are divergences? So price is making lower lows all the way going back. Forget about this low for just a second. But if we go from this guy all the way to here, I mean, that is not quite a lower low, but it's almost there. So again, this is the divergence you want to see. Which, oops.
And the most important line on the RSI is the blue line, right? We're looking for the blue. Okay.
So you see how these are all higher lows. These are all lower lows and these are all higher lows, right? So how do you confirm a higher low on this next hourly closure? Are we going to get continuation off of this candle to the downside? I do think it's probably going to come down a little bit more. Momentum will close. I mean, if this crosses back down, the problem is the only thing holding me out of this trade and like for me getting excited is the good trades start here with volatility low. Why do we want volatility low? Because we know what's going to happen to price. We're going to get a big explosive move. When volatility is already really high, probably not going to get the biggest move. Does it have room to go higher? Yeah, it can go all the way to 100%. This is kind of coming down. So any divergences here on the hourly time frame? Let's look from this point to this point. Yeah, so we got 1, 2, 3, 1, 2 drives. And these are higher lows coming from here to here. So we got, I'd say 2 drives, and that gave us a move to the green 55. That's already played out. Bearish divergence. Yes. That move already played out. So again, on the hourly, looks kind of like the moves played out, and we're probably going to range a little bit. I don't know how much I would trust it, but if we could get a 15-minute closure back below this wick. So again, that's why you use wicks as more conservative, is you'd want to see a full body close. You get what I mean by body now, Rob?
Totally.
So if I get a full body closure below that wick, that's what's going to tell me, hey, probably going to get a move to the downside to the tune of something like this, down here to 36,000 bucks. And that's where I do think price is probably going to head over some time. Yep. So I think that's going to wrap it up for today's TA 101, guys. I'm glad we were able to do this. And I think Hogan's going to do some pitch training at the end of the day. Other than that, let's keep our focus on the phones today. But generally, back to Bitcoin's price action.
Real quick, Chris. So this isn't enough to go, hey, clients, let's liquidate.
Yeah, great question. So what are we really waiting for now is going to be a daily closure below that level or above this level. See those wicks? So
yeah,
a candle body closure below 33,000. That's going to get us a move down below. We saw that based on the volume profile, the measured move on that one is down to like, is that 17,000 bucks? No way. That's too much. So that is, that gets us a move down to 20,000 bucks. But we'll have to judge it from there, based on all the things we use, right? The volatility, the momentum. I don't think we have enough to break this point right now. In fact, at 36,005 or 35,000, I think we could get a move down to 35,000 again, but I don't think we have enough to move down there. Why? Well, open interest has not gotten back above 13 to 14 billion. And this is something, I learned from Eric Crown, right? And what he's been preaching the gospel on open interest. And the fact is that you want to see open. So again, this is the open interest chart. The purple line represents open interest, all the leverage positions on the board. The black line represents Bitcoin's price. And until open interest gets above 13 or 14 billion, see how that says 13.5 billion right there?
Yep.
That says 13.5 billion. Open interest is sitting at about 13.5, 13.5. Until open interest gets that high, there's not enough liquidity in the market to get a big momentous move, right? You need more leverage in the market to get those big earth shattering moves. Does that make sense?
Mm-hmm.
When there's more leverage, right? Then the machines can sniper all that liquidity. Like I just got snipered on that little tiny 15-minute trade, like this big, look at this big wick, right?
Yeah.
This got me out of that trade. And why did I set it above there? Well, as soon as you get a wick above there, you're going to get at least a move to the 9. We got to move all the way up to the green 55. So, but momentum is still remain to the downside. And I would say we are probably more likely to get a little bit of a bounce here than not, because volatility is maxed out. And Stokes are going to cross up with any kind of a closure back above, call it 38,000 on the 15-minute. And let's see. Yeah, it's going to take. So I'd say probably we probably come up to this yellow 21 again. And then if price action wants to reject there. And what else is likely to happen on an hourly? Hourly is these typically you get a little backfill And again, how would we judge a bull trap or a bear trap? Well, we can go from candle body to body or wick to wick. So this is the breakdown area right here. So we go from that wick to that wick, right? So traditionally speaking, you'd see a bull trap happen right here at the 0.5 of the 618. So if price action wants to come up like this in the next 57 minutes, right? Come up to the 0.5 of the 618 right there. And then we get stopped out. It might even go a little higher, right? But you don't get a closure above there. And then we get a closure back below here, the 382. That would be your classic bull trap. But this is a continuation candle right here. So we should expect probably some more move to the downside. But I think this market is just faking everybody out right now. It's just in there to screw everybody, right? To the upside, to the downside, get everybody a little slack to the upside and the downside. And then probably when the US market opens. So again, look at this backfill. I should have played that, right? We'll probably at least get a move up to the 0.5. What kind of move is that? That is if you get it up to the 618, that's a 2% move. So if you did that on 2x leverage on a $200,000 trade, that would have been another, that would have been almost, I think 8,000 bucks. 2% on 200,000 is 4,000. Yeah. Times 2x is $8,000. But a weak bounce goes out. Remember, a weak bounce goes up to the 382 or the 236. So anyways, these are a bunch of nuances that, again, it takes some time. It takes a lot of study, but, that's what we're here for today together, is to all learn. And then we'll all be able to point out stuff on these charts that, hopefully we can continue to make very, very highly profitable and successful trades for our clients. And with that said, look at this thing getting shafted down. So it had a weak bounce, a very weak bounce on the 30-minute. And yeah, I guess if you measured it from this as the breakdown point instead of this, just based off this candle, right? You got to move up exactly to the 0.5 and got rejected. So really any kind of a 30-minute closure back below this guy, probably going to get you a move. I'm still waiting for this now. I'm waiting for a closure below 37.2. And that will get me bearish. Otherwise, I'm probably expecting it to bounce a little bit and just trade sideways here, at least for the next couple of hours. Yeah, I think that's it for today, guys. Any other questions off the top of your head?
Nope.
Nope. All right. Well, let's have a
Nope.
fun day, guys. We'll see you next time. All right.
Yeah.
Take care.